Good day, friends. It's Tuesday, October 20th, and this is not your cherry bomb trade. This is the video I owed you yesterday, but the morning was a little different yesterday, and it was nice different, but I didn't get to do the video, so I owe you this one. We're going to be putting on, or looking at, a underlying today, MMC, Marsh and McLennan Company, right? It has a liquidity rank of 3 out of 4, an IV rank of 14, and an IV percentile of 36. So it also has earnings coming up in 9 days as of today. So this one could be interesting. I think you'll enjoy the ride. So stick with me. We're about to hop into our platform. But first, allow me to introduce myself. My name is Neil, and this is Option Theory, and I want to thank you so much for clicking here. Today's trade is going to be a viewer-suggested trade, so I want to say right from the get-go, thanks to Frank, one of my viewers, for suggesting this underlying. I'd love it if you have an idea that you have an underlying you'd like to see traded. Why don't you join Frank? In our last week was Mike. Please go ahead and put a comment or head on over to optiontheory.com/contact and you can send me an email. Either way, just let me know what you'd like to see traded and we can get your trade in on one of our videos, right? It doesn't have to just be Mondays. Send them on over. All right, so on screen here, you can see that we're looking at MMC. That's the ticker symbol for Marsh. And whenever I switch over, I tend to goof up there. And there we go, we're back at MMC. What's interesting, of course, here is, I don't know if you end up using this tool here for fundamentals. You can see that since 2015, MMC has skyrocketed. It did have everybody had their dip in March, right? So it would be difficult to say, if you're a trend is your friend kind of thing, you wouldn't want to be bearish on this one, right? Another thing that you may not know, besides the fact you can see 2 here say reduce or avoid it, 2 here say it's great, right? But you can go ahead and click on these things. And I wanted to show you this one here. So I already had it open. But you click it, and it gives you this evaluation and highlights after. And what I thought is interesting here about this one, it says our opinion on the shares is to buy. We believe the this global provider of advice and solutions in risk, strategy, and human capital is well positioned to benefit from an increased demand for risk management in the wake of COVID-19 pandemic, right? So here's a company that deals with risk and insurance and all that stuff, and it tells you more about the company here. And I wonder, is this gonna benefit? Is it gonna keep going up because everybody wants to find out ways to protect themselves and their employees and really protect their businesses, really, right? So, with that, we can also see that it has a high liquidity of its share. Well, high liquidity. 3 out of 4 is pretty high, but that's in shares. It trades over 1 million shares every day. But let's take a look here. We'll go to add simulated trade. Oh, I forgot to do the rest of my intro. Well, hey, if you've made it this far, thanks. But so if you're new here, head on down to that description and you'll find a link. We normally do cherry bomb trades, and those come from Tasty Trade. Head on down and click the link to sign up for the cherry bomb trades. That's the next video. I'm doing 2 videos today. It's a 2 for Tuesday. All right, so sign up for those cherry bomb trades, and you'll get those emails like we do. But on Mondays, I like to do viewer-suggested trades. All right, with that said, I did my thing. Let's go to add simulated trade. We're in Marsh. We're going to be looking at the November monthly expirations because that's all there are, monthlies, right? And we know that the earnings is on the 29th, right, of October. So this is going to be potentially experiencing an increase in volatility. Knowing that, I want to benefit from that. Another thing to notice is that, you have some pretty wide bid asks, but look at the open interest. It's really close to the at the monies. And then look at the call side. Compare the amount of open interest here to the amount of open interest here. So you can see that we're seeing quite a bit more activity on the put side, and that's all right. So I think that's where we're going to end up playing with the put side. Of course, you can go bullish and do yourself a naked put here, or sell yourself a short put vertical. But I'm honestly thinking, because we have earnings coming up, I'd like to do a long put vertical as it's showed in my thumbnail, right? Now, I don't know if it's going to work because this one has a lot less open interest, but I'm going to shoot to buy the 115. So I'm going to left click the ask for the 115. I'm going to hold down the control key and look to sell the 110. Because the mechanics, if you're following Tasty Trade mechanics, is that you want to buy an option. If you're going to buy an option, buy one that has intrinsic value already. Buy something that's in the money, right? Then finance this purchase, right, with the sale of the something that has only intrinsic value, right? You only want to sell stuff that has just time value. So with that here, I'm going to scroll down a little bit over here, and we can see that we're looking at a vertical. It's going to be a debit vertical, long vertical. We're paying $2.15, right? And that is the amount that we can possibly lose. Going to go one contract wide. And if it doesn't fill, I probably am not going to have the opportunity to adjust this trade. But I might consider, maybe you'll consider doing, because there's more open interest, there's more volume here, buying the 110 and selling the 105. It'll be, lower probability. Greater possible profit, potential for profit, and you might actually get filled. But all right, now that we see this, let's take a look at our probabilities. Instead of this risk profile, we know we're going to expire on the 21st, so let's change our calendar here to the 21st. I thought it was the 27th. No, it's right, the 21st. Okay, yeah, there we go. All right, so I'm going to set my price slices to break even. And then I want to stretch this out a little bit so I can get a little bit more of that expected move on there. All right. So we are looking at a 51-ish% probability of being on or to the left of this line, which is good for us. The max possible profit would be 285. We would look to manage that right when it got to half of that. So where were we? 285, right? So 142.50. When that's worth $1.42 more than this, then we'd be looking to take this off, right? So 357, we'd be looking to take that off. All right, so that is the trade. I think we're going to put this one, though, we're going to put it into our IRA account, I think. That's where I'd like to put that one. Because I have nothing in my IRA account. We've cleaned it all out, right? We took some positions off. We've been secretly profiting on this one an additional $326 since we've been playing with it. So why don't we go ahead and throw that in there? Let's right click this trade, confirm and send. Once again, confirming our max profit and our max loss. The account that I want to put this in is in the IRA. I'm going to hit send. That's going to go over into my working orders. And this is the point where I say thank you and a thumbs up to you if you've made it this far into my video. It really does benefit me. It does help me that you watch my videos to the end. So you deserve that thumbs up. If you feel like you've enjoyed this video and it deserves a thumbs up, I would really appreciate it if you did that. And also leave me a comment for a underlying, or if you have an underlying with a whole trade idea, that's fine. Get it to me. I won't wait till Monday. Send it on over. All right, everybody. Until I see you in the next video, which I'm going to record right after this one. All right, happy trading.